An eye on your money. In 2013, investors enjoyed a pretty good year. Share prices are rising consistently all year round, but 2014, well, it's been a different story, though. Severe weather, international incidents creating a great deal of market uncertainty. But what about the housing market? The housing market, in fact, overtaking gold and precious metals is what the majority sees as the safest long-term investment. But since the start of this year, the housing market has been slowing with each passing month. The number of Americans buying new homes plummeted in March to its slowest rate in 8 months as buyers face record high prices and even higher mortgage rates. The Commerce Department reporting sales of new homes declined 14.5% last month to a seasonally adjusted annual rate of 384,000, the second straight monthly decline and the lowest rate since July of 2013. New home sales, they've declined over 13% in the past 12 months. Existing home sales also slowing dramatically, with many prospective buyers choosing the more affordable option of renting. Despite all this, median sales prices have jumped over 12% during the past month to $290,000. Joining us to try and make sense of what is going on in the housing market, Newsmax Financial Newsletter editor Jeff Yastine. Jeff, what's going on?
You know, a lot of it, I think, is the housing market has been cresting somewhat here. The part that isn't being said here is that a great deal of the housing purchases in this country over the last 3-4 years have been all cash deals. Not so much the ordinary individuals that we saw, during the run up to the big boom and bust. Now it's hedge funds, wealthy individuals, retirees who are taking advantage or were taking advantage of discounted prices in housing to buy second homes in places like Florida and Las Vegas and Phoenix, those sorts of. So it's an entirely different market, and it is beginning to crest here, certainly. The momentum is waning.
So you listed some of those groups. I understand also you've had the reemergence of real estate investment trusts buying up a lot of homes and then converting them to rental properties. And we see the influx of international customers, the Chinese, for example, coming into Southern California. And I guess to a certain degree, Australians and Canadians coming in as well.
Sure.
But for an American family, for a young couple with maybe a couple of kids, is the dream of home ownership in the current situation becoming more and more elusive?
It is. It's the thing here is that even though all cash deals have been driving the market, it's still tougher than ever to get a loan. The credit standards have been raised quite a bit, and it's just been a lot more of a difficult problem for people to come into the market, qualify for a good loan at a good rate, and be able to buy that home and stay with the prices. And because the prices have moved up so much, JD, again, 4 years ago at the trough of the fallout from the real estate bust, homes were very affordable then, but people didn't have money. It's tough for anybody. A lot of people still getting foreclosed upon. Now we're almost in the opposite situation. The prices have rebounded, and yet a lot of people at this point now can't afford these or can't get the loans even if they wanted to buy them.
Given the volatility or the fear, do you think a lot of people who may be homeowners are saying, look, we're just going to park where we are. We're going to stay here. If we have a mortgage and if we're not underwater, we're just staying put. Is there a lot of inertia based on fear in what we saw with the last bubble?
Yes, yeah, there really is. A lot of people decided if you manage to keep your house through the bust, you stay in your house and you try not to take any real risks. And that's something that I think really echoes through this. And the other thing is you've got really a generation of previous homeowners who were foreclosed upon, lost their houses, a lot of them in these robo-signing scandals and that sort of thing, and are probably looking to try to get back in the market. But again, can they afford it? Can they keep up the payments? Mortgage rates are higher too, so again, that adds to the burden that somebody has to do.
And so we're seeing all these, we'll euphemistically call them challenges that exist in the market. Still, a whole lot of money has come in from perhaps not typical home buyers, but from professional investors and those with the capital. And the concern again for a lot of people is this: are we seeing the elements coming back together to have another real estate bubble? Is that something on the horizon?
Frankly, I think we have a bubble now, all right? But the key is it's unsustainable. How many more cash buyers are there to take the houses off of the hands of somebody else who also bought it for cash? You know, the greater fool theory. That's just not sustainable. The key is, are the other buyers, ordinary people, going to come in off the sidelines and buy it at similar prices? I just don't see it. You know, at some point we have a retrenchment. Maybe everybody else who's still on the sidelines comes back in if they can get the credit for it. But again, that's an awfully large question mark.
So a situation where, from your evaluation, there's less dramatic, but the bubble is right now.
The bubble is here, but the key is that when the bubble retrenches, you know, I don't think we're going to see the kind of massive collapse that we saw in 2007. In part because when you have so many all-cash buyers that own this stuff, they are not leveraged up the way people were leveraged up. Ordinary, owners were leveraged up in 2007. And these are institutional holders of real estate. So there's a little different attitude and a lot more depth.
As people take a look at investments, it's always seemed that real estate has been the place, that, as I heard from a developer years ago, well, the good Lord's not making any more of it, so I'm just gonna stick with real estate. Do you expect popularity of real estate? Is that something apart from home ownership? Do you expect real estate to remain an investment that right now is very popular?
So really what you're asking is speculation in real estate. As long as the Fed keeps interest rates as low as they are, it will continue to be speculated upon because it's just another factor of the Fed's extremely easy money policies. The cash goes into the hands of the people who have and institutions, but whether that money dribbles down to ordinary folks who really are the key supporters of this economy, again, big question mark.
Jeff Yastine, we appreciate it as you raise the S word, speculation. What do you speculate is going to happen with our economy and the housing market? We'd love to hear from you. Tweet us your comments at Newsmax TV, #America's Forum. We're coming right back.